Ump or dump strike coin, a deep dive script you can use for a video or long form presentation that unpacks whether strike coin is poised for a major pump or sitting on the edge of a risky dump. And right up front, remember, I'm not a financial advisor. This is analysis and opinion to help you make your own decision. First, set the scene, introduce strike coin quickly, what it claims to be, its primary use case, and why people are talking about it now. Then immediately move into why the question pump or dump matters. Crypto markets are emotional and momentum driven, so tokens with a mix of strong fundamentals hype can explode upward rapidly, but the same dynamics can create violent reversals. Start with a concise origin story: who built Strike Coin, when it launched, whether it was an IDO or emerged from an existing project, and the founding narrative that investors buy into. E.g. a lightweight payments token aiming to simplify microtransactions, or a DeFi native cross-chain settlement layer, whichever fits Strikecoin's stated mission. Explain the team briefly. Are they known devs with past projects, ex-CEOs from reputable companies, or anonymous white paper-only founders? Team credibility matters because projects led by seasoned teams tend to survive regulatory pressure and deliver product roadmaps, whereas anonymous teams raise execution and rug pull risk. Next, examine the technology and product market fit. Does Strikecoin bring real utility? List concrete features: low-fee fast transactions, smart contract programmability, staking and yield mechanics, a novel consensus mechanism, cross-chain bridges, or partnerships with payment processors, and evaluate whether these features solve a real user pain or are simply marketing buzzwords. If Strikecoin has working mainnet products, dApps, or an active developer community, that's a major tick toward long-term value. If it's mostly a token with promises but no product, a spec token, that increases dump risk. Now switch to on-chain and market signals. Look at liquidity, circulating supply versus total supply, token distribution, and vesting schedules. A coin with most tokens held by a few whale addresses or with large amounts scheduled to unlock soon has structural downward pressure. Those scheduled unlocks often trigger dumps as early investors seek profit. Conversely, healthy liquidity on multiple reputable exchanges, a wide holder distribution, and slow vesting schedules reduce the chance of a sudden crash. Mention trading volume trends. Sustained rising volume with price appreciation suggests real demand. Sudden spikes in volume paired with social media frenzy can be ephemeral and prone to reversals. If Strikecoin's market cap relative to its active user base, or TVL, total value locked in its ecosystem, is extremely high, that's a red flag. Valuations disconnected from real usage are vulnerable. Discuss tokenomics carefully. How is the token used? Is it a governance token, a utility token for gas fees, or a reward token? Are there built-in deflationary mechanics, burns, buybacks, or inflationary issuance, continuous mining, or staking rewards? Inflation without clear demand sinks tends to pressure price. Deflationary designs can help, but only if they're real and sustainable. Also highlight whether the project's incentives align with long-term growth. E.g. is staking rewarding holders while funding development, or are rewards simply mining emissions that encourage quick in and out behavior? Explain how token velocity affects value. High velocity rapid turnover can make a token behave like a medium of exchange without store of value properties, limiting upside. Next, examine fundamentals beyond tokenomics, partnerships, integrations, exchange listings, and developer tooling. A listing on top-tier centralized exchanges and presence in major DeFi aggregators increases accessibility and liquidity, which can support a healthy price floor. Real-world partnerships, payment platforms adopting Strikecoin for micropayments, merchants accepting it, or enterprise pilots create durable demand. Developer adoption is equally important. How many GitHub commits, active contributors, or third-party dApps are building on the protocol? If the community is vibrant, you get network effects. If developer activity is stagnant, the narrative may be hollow hype. Pivot to community and narrative momentum. Crypto is storytelling as much as engineering. Track the sentiment across Twitter, X, Telegram, Discord, Reddit threads, and influencer shout-outs. A passionate, growing community that engages in constructive activities, hackathons, bug bounties, liquidity mining is a good sign. But be wary of inorganic growth buy-in campaigns, fake engagement, or paid influencers hyping a token temporarily. Identify any centralized actors behind the noise. Are a handful of accounts driving promotions and controlling the narrative? If so, the community might vanish when the paid promotions stop. Social engagement metrics are short-term predictors of pumps but poor indicators of sustainable value. Emphasize that correlation but not causation. Then do a news and regulatory scan. Has Strikecoin been mentioned in mainstream outlets, audited by reputable firms, or subject to regulatory scrutiny? Audits from respected security firms reduce more contract risk but don't eliminate it. An unaudited contract or one with controversial code paths e.g. admin keys that can mint tokens is a major red flag. Regulatory risk is material. Tokens that look like securities or promise returns may attract enforcement action, which can instantly dump price. If the team has been transparent about KYC, AML practices and regulatory compliance, that's reassuring. If not, flag it. Move into technical analysis. TA as a supplement, not a substitute. Review recent price action patterns, support-resistance levels, moving averages, and ESIM-ACD readings if you want a short-term trade view. For example, an asset above its 50 and 200-day moving averages with steady volume often indicates bullish momentum pump potential, whereas divergence between price and volume or overbought ESI levels can presage a reversal dump risk. Include chart patterns, ascending triangles and breakouts can cue pumps, rising wedges and bearish divergence can cue dumps. But be explicit. TA gives probabilities and timing windows, not certainties. Now synthesize catalysts and risks into two clean lists in prose form. Still within the paragraph, catalysts that could Dr. Strikecoin to pump include major exchange listings, a successful mainnet upgrade, partnerships with payment platforms, a viral DeFi product built on top of it, major influencer endorsement that leads to retail FOMO, or macro tailwinds for crypto in general. Risk-on environment, favorable regulation, or inflows from new ETFs or institutional buyers. Conversely, dump triggers include token unlock cliffs, negative audit results or exploit hacks, regulatory crackdowns, delisting from key exchanges, loss of core devs or founding team departures, or a broader crypto market crash that amplifies selling pressure across altcoins. Emphasize interplay. Sometimes a single negative event combined with high leverage in the derivatives market can produce outsized dumps. Provide a realistic risk-reward framework. If Strikecoin is at an early stage with solid tech and a credible roadmap, risk-seeking investors might allocate a small percentage of their portfolio for asymmetric upside. A must be prepared to lose the whole allocation. If instead Strikecoin is speculative with questionable tokenomics and team opacity, even small allocations are risky. Offer practical trade management tips. If someone plans to trade the pump, set strict position sizing rules, use stop losses to protect capital, and consider taking incremental profits e.g. scale out at predefined levels rather than letting greed erase gains. For hodlers eyeing long-term adoption, suggest assessing on-chain user growth, monthly active wallets, and developer activity quarterly. If those metrics trend upward, the long-term thesis strengthens. Include a brief checklist viewers can use to evaluate Strikecoin. Again, in paragraph form, verify the team and their backgrounds, confirm the presence of a working product or mainnet, review token distribution and vesting schedules for large unlocks, check for reputable security audits, measure developer and community activity, analyze exchange listings and liquidity depth, read the latest news for partnerships or regulatory flags, and watch for unrealistic marketing claims promising guaranteed returns. Encourage skepticism. High-yield promises or guaranteed returns are classic pump tactics. Suggest tools, Etherscan or relevant chain explorers, Dune or Nansen dashboards for holder distribution, CoinExplomerShank for market data, and GitHub for developer stats, but remind users to cross-check and not rely on a single metric. Conclude with an honest, balanced view that answers the central question: is Strikecoin a pump or a dump? Avoid a binary shout, instead position it as probabilistical. If the project scores well on team credibility, product traction, healthy tokenomics, steady on-chain growth, transparent audits, and meaningful partnerships, then the odds of a sustainable pump increase the coin could attract genuine demand and appreciation. If instead it shows red flags, concentrated token holders, imminent large unlocks, anonymous or unproven team, lack of real product, heavy influencer-led promotional campaigns, or audit concerns, then the probability of a dump is significantly higher, and any short-term pump is likely speculative and fragile. Reiterate that many coins experience a rapid pump driven purely by sentiment and then crash hard. Holding through such volatility requires both conviction and risk tolerance. Finish by giving viewers a clear call to action. Do your own research, use the checklist, watch for the specific short-term catalysts listed, and never invest more than you can afford to lose. If you want a trading approach, suggest concrete rules, limit initial exposure to 1% of capital for speculative altcoins, set stop losses at a level that respects support structure, for example, below the most recent swing low, and take partial profits on the way up to de-risk. If you prefer long-term investing, review the project's quarterly development updates and user growth metrics for at least 3 consecutive quarters before increasing your position. And by inviting engagement, ask viewers to comment the questions they want answered about Strikecoin's roadmap, share any on-chain dashboards they've found, and request an updated follow-up analysis if new major events happen: exchange listings, audits, hacks, or regulatory notices, while again reminding them this is educational and not personalized financial advice. This single continuous narrative gives your audience a thorough, structured, and practical way to judge whether Strikecoin might pump or is at risk of dumping, equips them with the tools to monitor the project going forward, and balances excitement with sober risk management so they can make informed choices rather than chasing hype.